let's then start straight away with our first guest. Mahantesh Sabarad, the Deputy VP of Research at SBI Cap Securities, is with us in the studios. Morning, Mahantesh. Good to have you with us. Well, market is putting up a fight at this 8160, 8180 mark. Do you think there is a lot more bad news to discount? Should we see big losses at an index level?
I think after the result season where there were shock surprises in terms of results of some certain large companies, a lot of the market participants have now been factoring a lower earnings trajectory in the years ahead. So even as I speak to you, some of the earning estimates are yet to be, lowered. Yeah, because between 15 to 16, perhaps the market is factoring in 33% kind of earnings growth on the Nifty. Probably will not see that much, and the 20% thereafter, or 21% thereafter in the subsequent year. So probably both will average down to a 20% kind of number, or probably the growth rate will be higher in the later year. So the earnings outlook does seem to be subdued, and the market is reacting to that. So apart from the credit policy, yesterday, for example, people were asking, why did the market fall so much? It was a 25 bips cut. It was as expected and etc. Although the governor has been known to be a little hawkish, and he continued with a near hawkish kind of commentary. But the fall of yesterday was probably telling us that the market is disbelieving the earnings forecast of most analysts right now, and probably earnings downgrades are still due.
Okay. Mahantesh, I was looking at the week-to-date losses for the Nifty stocks. It's Sun Pharma which is topping the list with a cut of 12%. Are you confident in terms of the Rand-Baxi integration, or do you think FY16 will see more pain and hence further downside for Sun Pharma?
Actually, it's very difficult to talk about this merger and integration issue, simply because, from an analyst perspective, and most street analysts have really shocked. The most shocking results of the quarter gone by was perhaps, I would say, Rand-Baxi and the pharma sector in general, because pharma for the last 5 years, 6 years has never surprised analysts on the downside by such a large extent. So having said that, at least the belief with the management is that they will be able to overcome the integration challenges going forward, and hence, as a stock, as a business, Sun Pharma will continue to see better days ahead. So probably the pain is a 3-month pain, 6-month pain, we don't know. So it's very difficult to judge. Having said that, I think the stock is reflecting merely the uncertainty of the time element in terms of the integration. So while the integration will end up positive, we are pretty sure about that. It's just that in the interim period, people don't want to take the risk on the stock as yet. So for us, it still in a way remains attractive, and hence a buy.
Okay, sorry for interrupting. In your previous reply, you were saying that the market is still coming to terms with the analyst forecast and expect that it will even be worse than their already lowered forecast. So what could be the measure of loss? I mean, you take any measure, will it be Sensex, Nifty, or any other? How much you think there is another 10% fall waiting to happen, or even more?
I think let's look at it in two buckets. One is the valuation, one is on the earnings itself. So earnings trajectory is going to come down. Valuation is something, because of the market correction, we have seen that the valuation levels are at least a year back. So we are seeing the forward valuation numbers are telling us it has gone to the levels 1 year back. Index wise, or some of the other indices wise, the indices are still higher. So that valuation having remained virtually static or 1 year back tells us the earnings, some of the downgrade of the earnings has happened, some is yet to happen. So from a valuation perspective, we will see, while the earnings will fall down, we'll perhaps see valuations inching up, because now you will see growth rate better. So markets are always forward looking, and the trade-off seems to suggest that probably market will have not a sharp fall going forward, perhaps a slight correction into the future.
Where is the correction not happened? What should one be wary of buying?
I think after having looked at the pharma sector results, after having looked at some of the IT guidances, and these are the most defensive sectors in the market, one would be really wary about going overboard in terms of the valuations for these two sectors when you take a stock call. As far as the other sectors are concerned, so it's a play on perhaps now the markets are going to have a closer look at some of the cyclical stocks and might find value in some of the cyclical stocks. That leaves aside, I think, a large weightage in the market, which is the financial sector, the BFSI sector, and this seems to be among the safest sector right now. Because we do know that inflation has corrected, we do know that the interest rate easing cycle has not bottomed or perhaps, and I'm not looking at just merely the next few months or the next fiscal year. I'm saying that if we look at a 2-year perspective, then we are bound to see more interest cuts. And in an easing cycle, at a point in time where credit growth is actually very low, the sector can only rise here in onwards, and valuation wise some of the BFSI space valuations are very cheap.
So you are open to buying even public sector banks?
Yeah, some of the some of the names that we were looking at in terms of PSU, the valuations thereof have fallen below on a 10-year valuation basis, even one standard deviation below their average multiples, or at times closer to the two standard deviation kind of number. So valuations have sharply corrected. The concerns on the sector have now got to do with stressed asset was a concern, I would say, in the past. I think what they will be looking forward to is capital infusion and capital adequacy to meet the possible growth ahead.
Okay.
So if those companies or those PSUs who have the ability to attract capital or be better capitalized going forward are the ones which appear attractive.
Okay. The auto space, Tata Motors is down 9% YTD and Bajaj Auto is down 7% YTD. Which one would you be more confident on in terms of recovering for the remaining part of the fiscal? Tata Motors, which has a global play to it, or Bajaj Auto, which is more susceptible to the rural slowdown?
See, I think if you look at the falls of both the companies, Tata Motors' fall has been of the recent origin. Bajaj Auto has had a fall much earlier to Tata Motors' fall. So that tells me that Bajaj Auto's earnings forecast, its growth outlook ahead has been discounted far earlier than, let's say, that of a Tata Motors. So by that metric alone, despite the near-term challenges which tells us that monsoon will be poor, agricultural output will be therefore poor, and hence the rural economy will not do well, and to some extent it will have an effect on Bajaj Auto. That seems to be in the price.
Okay.
So for
what about TVS?
TVS, see, unlike Bajaj Auto and TVS is far domestic oriented.
Yes.
Bajaj at least has an avenue in terms of its exports and the business abroad, and there is a small value that accrues to it from its KTM stake as well. So Bajaj seems to be, from that perspective, far more insulated to a TVS, and I think Bajaj Auto is far cheaper. You're coming back to your question relative to Tata Motors. But having said that, mind you, there is an upside available on both the stocks. I'm not saying that Tata Motors will fall further. In fact, it is now below its rights issue price. So by that logic alone,
Worth buying.
It's worth buying.
Okay. All right. Disclosures?
All the stocks we don't own the stocks. We are in the midst of applying for the SBI RA regulations, and as a firm, we don't hold these stocks.
All right. Fair enough, Mahantesh. Thanks very much for joining in and talking to us.